Hey everyone, this is the Trader Investor coming to you on Friday, June the 4th. This is the last trading day of the week, first week of June. Today there's non-farm payroll news coming out as well, and that's what could potentially drive the overall market. We'll take a look at that as well, just to see how they are doing, what was the news, because sometimes that news can drive things much higher or lower. And so as we take a look at non-farm payroll, employment changes in Canada, and then non-farm payroll in US, these are red, meaning they could significantly impact broader markets, especially the US non-farm payroll. So the US added 559,000 jobs last month. However, the expectation was 245,000. So this is slightly off. It does not mean it's a bad thing, but sometimes when it doesn't align with expectation, markets could act wild. I'm not seeing any of that wild action. We'll come back to the charts and take a look at that. And then the other important number is unemployment rate. The unemployment was expected at 5.9. It dropped to 5.8, which is also a good sign. So basically, non-farm payroll, as you can see from ES futures, it had some impact, not that huge of an impact. This was the bar that the news was released. This was a 17-point range in the ES, which is really not a big deal, especially that the gap up that we will see in the SPY is going to be contained within the previous day. So if you look at SPY, here's the pre-market value, and the gap up that we will see not quite contained in yesterday's action. It's outside of yesterday's action, but it's still not outside of Wednesday's action. And the reason why I like to mention these become a little bit tricky to trade, because every time we come up here now, we have this whole order block to contend with, and then we have these levels, the 15-minute range, high, mid, and low of Tuesday. That is, in the way for us to get that dollar move after we clear the order block, which means after we clear the highs of Wednesday as well. So those become a little bit tricky to trade. And again, it's okay if we don't take trades. We don't have to take trades. And so this is where we're going to open, and this close will shift once the market opens. It will come down here, this low will come down here, and then the high here that you see from Wednesday will be the high of Thursday. So we're above all these areas, great, but we're not above these areas. So that's going to be a little bit tricky to trade. And if we look at the Qs, similar thing, right? Qs are opening up above yesterday's high, but still we have some other headwinds that could potentially block us. And to the downside, there's no play to the downside for me yet. For me to beat the downside, I need to clear this, retest some higher level so that at least I have $1 to this. Clear this, retest to some higher level, at least I have $1 level to here. This is how I'm looking at it. So it might be one of those days where trade will be a little bit challenging. To the upside, I want to see this cleared, and maybe we retest the highs of yesterday, and will that give us $1 move? Yet to be seen, right? It all depends where price action is. So from here to here, $1.37, that's pretty good. If we get an entry as close to the highs of yesterday as possible. And what do I mean by close? If it really turns there, unless you're one of those aggressive traders that says, hey, as soon as it touches, I'm entering, I need to see a break of structure or some sort of a trend line to enter, so my entry will be higher. So to be on the safe side, if price penetrates slightly and then recovers, then you'll have a good entry right at that level. So that's how I'm looking at the market. So again, it's okay if I don't trade 2-3 days in a row. That's okay. Yesterday was a good payday. I showed you an SPY. Yesterday was a good payday. So, you know, the day before, no trade for me. If today ends up being another no trade, that's okay. IWM is not even opening higher than yesterday's high. For some reason, IWM is showing some weakness. And when IWM is weak, for me, it's a sign that the overall market is not yet strong. And there could be opportunities with SPY Qs, moving for day trade. But for swing trade, I'm not very comfortable to load up for swing trades because IWM is weak. For me, IWM is my leading indicator. If the small caps are lagging, if they're showing some weakness, that means the overall economy is not as strong yet. And the recovery from COVID is not feeling the heat that it needs to boost, right? A lot of the heat to give it energy is not feeling that. It's actually feeling the heat as, downward pressure and getting tired. So instead of that, I want to see the heat as a fuel, as a boost to keep it moving higher. So that's not what we're seeing yet. So no entry yet for me, no signal here because of where we are. So I need to see a few areas cleared. We will probably clear the mid of Wednesday. We'll probably clear that, during the opening 15-minute range. But I need to see some more action to see where to trade. So not feeling it yet. Diamonds opening near the highs of yesterday. There's a lot of areas that need to be cleared. We need to clear all those areas before we have a solid entry. So they're all playing similarly. Let's see how they open and react. And then when I do the analysis at the end of the day, we can take a look at were there opportunities or was it one of those non-tradable days. All right, everyone, I'll see you in the next video, which I will do about AMC this morning, and then another one analysis later on in the day. Take care, everyone.